Welcome back to the second half of the Futures Show. We're now less than 60 minutes away from the cash open for stocks on Wall Street. Futures are still suggesting we'll see a positive one this morning. We're in record territory here as we get set for the second open of the new year. Let's bring in Scott Bauer, the CEO of Prosper Trading Academy, is joining us this morning. Scott, welcome. Thank you. Happy New Year. And thanks to you. No data at the bottom of the hour, but let's begin with the spike that we saw in rates yesterday to begin the year. The TNX up and through 1.6.
Absolutely, and a major spike. Look where we were literally just a month ago, like December 5th. We were down almost at, 132, 133. To have that kind of move so quickly, especially over the last couple of days, and to see the equity markets rally alongside of that, what that tells me, Ben, is something you and I have been talking about for quite a while, is that, barring the virus, barring Omicron, barring any other, other big macro factor here, this market is ready for higher rates. I'm not saying 3% or anything like that, but this market is ready to see a 10-year approaching 2%, I believe. And, we may see that by May or so. You look at what the CME FedWatch tool, which kind of measures the expectancy of what the Fed is going to do. And for the March report coming out, there is almost a 60% chance of a raise in March and an 80% chance in May. Market looks to me like it is ready and willing to accept that.
Yeah, it seems poised to. We talk about the range that we've been establishing, how as we work our way through the middle towards the upper extreme, again, you open up the door for a retest of and potential breakout here. I mentioned no numbers. Actually, real quick, before we take a look at this, I just wanted to point out, in holding in this range, but Scott, to your point, a visual, here's the ES on the bottom half of the screen, new all-time high just in the overnight session recently, 48.07, spot 50. So as the rates seem poised for another test or a breakout, even potentially up the upside here, TYX still a little bit ways off that 2.5 level. I mean, your point was, again, it hasn't really derailed this move up. And again, there's not really much in terms of headwinds at this point from rates, and no numbers yet this morning, but a busy week in terms of, we've got jolts later today. We've got the FOMC minutes on Wednesday and the jobs report on Friday. Those really stood out to me.
Absolutely, but you know what? Throw in also, we've got ISM manufacturing today. We've got ISM non-manufacturing, I believe, on Thursday, which, along with the weekly jobless claims, which probably won't be as heavy as a number because of the December jobs report on Friday. But yeah, this is a jam-packed week. Actually, nothing like starting off the new year with a jam-packed week. And we have the Fed as well.
So the manufacturing data, Scott, I'd imagine is going to be important for investors and traders to get a little bit of insight in terms of some of those supply chain constraints and basically what the producer side has been able to weather or establish, and then ultimately, because you factor that down to the trickle-down effect that has to the consumer side of things eventually.
Yeah, no doubt. And towards the end of the year, just, last week, a couple weeks ago, there's been some talk about some possible easing of some of those supply chain, problems that we've seen. And, maybe we're going to see that now. I don't know how much of a change we could have gotten in just the last couple of weeks, but it certainly seems, from everything that I have read from companies coming out, and there's not so many big earnings reports right now, but companies coming out and saying that they're seeing that maybe ease just a little bit. And that could all be leading in also to why the market is actually just flying to all-time highs.
I like it. That could be a big part of this Santa Claus rally. And here's that double bottom that we've been talking about around that 4,500 level. I'm sorry, I said 4,200 earlier. I meant to say 4,500 in terms of that pullback that we saw into December. But Scott, let's talk a little bit about currencies in terms of where things are going, because we did see rates on the rise yesterday, and that gave the dollar a little bit of a lift as well.
It did. And how about the dollar versus the yen, right?
Big time. Yen to a 5-year low, I think it is.
Five-year low, exactly right. And what does that tell you? I mean, that is risk on, right?
Yeah.
That is risk on, full steam ahead. You look at some of the other currencies, the Aussie dollar, which is typically connected to, risk on, risk off, that's rising also. New Zealand dollar, not as much, but you're also seeing the British pound rising. So, there's some risk on across the board internationally.
Scott, let's talk about the international component of things and what we should be watching for there, because ultimately it does factor into the U.S. dollar. We talk about some of these other currencies, the influence they have on. I mean, one of the things I've been discussing with our guests throughout the morning so far is how there were a lot of concerns about, Europe in general as far as the Omicron, and it seems like some of those concerns have been lifted, and so an easing of some of the pressures related to at least that aspect of things.
No question about it. And, JB touched on it just now as well. And we're all kind of seeing this, is that as rampant as this is, the bottom line is hospitalizations and bad sickness. We're not seeing that, which is obviously a great thing. So the markets, the risk markets, are taking that into account, and we're seeing that reflected across the globe internationally. One thing I'm looking at, Ben, and I'm going to tie this in a little bit, and maybe a lot of people also. I know a lot of people whose kids are studying abroad right now, and those programs have not been canceled in Europe. They have gone. They are open. There's obviously caution, but they are open, and I think that is kind of flowing through to what these European economies are experiencing right now. That yes, the spiking cases, just like we're having here, is off the charts, but yet the economies are in motion.
Scott, let's talk about volatility. You mentioned the yen and that reflection of the risk-on sentiment. We've got the VIX here at levels we haven't seen since end of November, middle of November. The futures are still holding above the lows from December, but they've come off significantly as well. And again, also a reflection of some of that sentiment.
They have been, and I'm a little concerned to see the VIX here and to get as low as it is right now. And historically, again, if you throw out the period of COVID from, February of 2020 until now, if you throw that out, 16, 17 in the VIX is actually on a little bit of the high side. This is the lowest point that we have seen in 18, 24 months or so. I'm a little concerned about that. I do think VIX can move higher from here, even with the markets staying at all-time levels here. So I certainly think that, as a trader, investor here, that if somebody wanted to stay long risk assets in the market, it's actually a great time to buy a little protection with the VIX as cheap as it is right now.
I was just going to say, it does seem very cheap, and, expect the unexpected, and oftentimes the least expected. We get tunnel vision as traders, and we get caught up in the euphoric, optimism again, and the new all-time highs aspect associated with everything. It's important, Scott, to keep in mind and stay focused on the headlines. What could derail some of this momentum that we've been seeing to the upside?
Well, besides, Omicron and the overall theme of COVID, I think that the Ukraine-Russia situation is something that can be volatile any moment here. We have some news coming out of OPEC today. I don't know that could derail the marketplace, but that is certainly some sentiment. And, there's always news coming out of China and rhetoric there. So, listen, I just think, I'm of the mindset, Ben, that you buy when you can and not when you have to. And insurance right now is on sale to me. You
can buy, you're saying, right now, not when you have to, when it's on the rise. In other words, it sounds like. Scott, I like the breakdown there, and I've been keeping a close eye on the U.S., Ukraine-Russia situation as well. It sounds like the U.S. willing to back Ukraine. What that would mean, if need be, and called to answer to that question would be a different story. Lastly, Bitcoin getting a little bit of a lift, but not necessarily the same reflection of that risk-on sentiment. The yen to 5-year lows, the ES new all-time highs, Bitcoin hanging out right around that 46, 47, below 50,000 still.
Yeah, the bears are I would say they're in control, but not decisively in control right now. 48,000 is a big number for resistance. I know we traded up last week all the way to 52 and then just dumped right from there. 48 is a big number on the upside. To the downside here, it really wouldn't surprise me if we test 42 or so. But yeah, Bitcoin has just been, pretty low volatility and low volume over the last week or two. Maybe we're setting up for a big move one way or the other.
All right, something to keep an eye on. Scott Bauer, always appreciate you joining us here and helping us break down financials. Again, no numbers at the bottom of the hour today, but a couple still to come our way this morning. We'll be keeping an eye on the JOLTS, the job openings report. Scott, always appreciate it. Scott's the CEO of Prosper Trading Academy. We're going to take a quick break, but first,